Hey guys, welcome back to my channel. So as you can see, I'm flying in my private helicopter right now because I've got the greatest Bitcoin indicator that you could possibly find on TradingView, helping me perfectly find the tops and the bottoms, and I'm gonna tell you about it right now. So if you're curious about like why I'm telling you about this, so first, before I became like very conservative in my outlook towards Bitcoin, where pretty much I only recommend people just DCA, never look for tops and bottoms, and just take a very conservative outlook towards their cryptocurrency journey. I did spend a lot of time trading derivatives, inverse perpetual swaps a number of years ago. I spent so much time on this stuff, and I had varied amount of success. I really did ride the roller coasters, ups and downs, and it's been okay, but it's the kind of journey that I would never play again or recommend anyone else get into. But with that being said, I was able to successfully identify one indicator that helped me out a lot, and I owe most of my success to this one indicator, and it's called the Bitcoin hash ribbons indicator, and I'm going to tell you how to use it and what it actually is about. So, by the way, just as a little quick preamble before I start, if you ever watch videos about someone, telling you about, I've got the best indicator for this, that's going to tell you exactly where Bitcoin's going to go, most of the time it's garbage. You should always be wondering, why that person is giving you this kind of information for free, if it's worth so much money. So I'll just be straight up, like, the reason why I'm telling you about this stuff now, because I'm kind of scraping the bottom of the barrel for content. I'm running out of these things to talk about. So that's number one, and I just figure like not that many people are gonna watch it anyway. And number three is that I don't think it's that perfect of a strategy. Like, I think technical analysis is a bit of a red herring when it comes to the things that you should be focusing on. If you're going to just be trading in spot, the best strategy that you can do is just simple DCAing. Allocate a certain amount of money every week or perhaps every month to just consistently put money into the market, whether it's a bull market or a bear market. To me, that's a much better strategy than trying to pick tops or bottoms. And if you want to use different strategies like the one I'm about to provide for the purposes of inverse perpetual swaps, you will get wrecked simply from engaging in highly risk-on behavior. So the only purpose for why you would want to pick a top or bottom is maybe because you've got a bunch of cash, and if you feel that there is going to be a time that is more opportune for buying because perhaps we're at a low point, then ideally you'd want to buy when it's low. I think that's as simple as that. But I think the amount of advantage you could get out of like some kind of amazing indicator is limited, but I'm going to tell you about it anyway, because I think the more tools you have in your toolbox, the better you're going to do like on your overall crypto journey. So enough with that, let's just get into it. So let me tell you about the story of the hash ribbons, right? It's a very interesting theory, right? So before telling you the story, I'll just show you the chart, and it might be a little bit easier to show it to you on a more extrapolated basis. So here, this is a bit better of a chart, because if I show it to you on TradingView, it's just going to look all clunky and stuff. So this is an indicator. It's something you can find on TradingView, and just focus on the red ribbons for now. So what you notice is that around the start of the red ribbon, or just around that general area, it's nothing too specific, right? You notice that there is a sizable crash, and then by the time the red ribbon ends, there's a notable upswing, right? So if you wanted to pick the bottoms, the best times to buy, and you wanted to see when exactly there would be a bull run or a big upswing in the market, you'd want to look at these ribbons, right? So if we look at the first one here, that's a perfect example. The second one, a little less so, but the price does go up, and we see, it shows that the price is in a bit of a trough here. This third one here, and third to the left, you can see it's really nicely timed, like the very bottom, and then and then it shows the price is going up, and it goes on like this, right? So every time that you see these ribbons, it shows that it tends to indicate when a bottom has been reached and when there is going to be an upswing, right? Now I want to show this to you on TradingView as well to give you to make it just a little more clear here. So I'm just going to measure this from 2020. I don't want to show every single example of this happening. You can check it out yourself. You can go to TradingView and type in hash ribbons, right? So what you see here is the start of this first little circle here, the start of these red, this red zone here is what's called a miner's capitulation. I'll explain the lore behind this, right? But I just first wanted to show you that every time we get one of these so-called mining capitulation events, we get a local bottom, and then we get something called a buy signal, and the price goes up, right? So it's really simple, right? And it just works again and again, right? For the most part, like sometimes they're more effective than others. There are times where the price goes up for a while, and then it will later come down, but for the most part, like they do precipitate some pretty extraordinary buying opportunities, and it does precipitate like large bull waves, I guess you could say. So what is a mining capitulation? So I'll just quickly let this article do some of the hard work for me. I'll just read the first sentence before I explain it in more detail. So the Bitcoin hash ribbon indicator tries to identify periods where Bitcoin miners are in distress and may be capitulating. The assumption is that such periods can occur when the price of Bitcoin is at major lows and may therefore present a good opportunity to buy the dip. So what does capitulating mean? Well, that means a Bitcoin miner has gone ahead and decided to just shut their mining rig off, right? So why would they do that? It's because a Bitcoin miner is to mine Bitcoin is a rather expensive operation. It's rather complex, right? Like you don't just switch on your computer and just start mining Bitcoin. You've got to spend a lot of money on energy, right? You've got to spend a lot of money on electricity. You might have even gone into debt for, like, say, the mining rigs, right? Because especially now in this day and age, if you want to be profitable, frequently these miners have, like, one individual person may have up to $100,000 plus worth of miners. You know, long gone are the days where just one individual can mine Bitcoin on his laptop, right? People have to have a whole setup with a lot of infrastructure. And just like any business, like there's boom and bust cycles, and people frequently go out of business. So what you're seeing when let's pull up the TradingView again. I'm going to zoom in to give an example here. You know what? Maybe I could pull up the log just to make it a little more clear. What you're seeing when you see these so-called, this gray one here. Oh, I got to get out of the way. When you see these mining capitulations happen with these little gray circles, what you're seeing is the price has gone down. It's just gone down because it's gone down, right? There's no specific reason why it's gone down, but because it's gone down so suddenly, it's caused a number of people who are mining Bitcoin to basically be forced to switch off their mining rigs, right? So what might happen is, most miners belong to mining pools, right? So every time, every 20 minutes, there's a new Bitcoin mined, and that Bitcoin will go to whoever was able to successfully break the SHA-52 algorithm, right? And there's all these different miners all throughout the world that are competing to be the one to first solve this algorithm. And only one person can do it. And the person that can do it is the one that's rewarded with one whole Bitcoin. Well, sorry, not one whole Bitcoin, but they get the whole mining reward, which is significantly less than one Bitcoin now, right? But the point is, this reward isn't given to, to everybody, right? So what's happened is you've got a number of individual miners, but most of the time, the reward goes to these collectives, right? These are called mining pools. And so a number of people decide to pool their mining capacity together. So maybe it's like you've got one guy with 10 ASIC, Bitcoin miners, and you've got another guy in China who's got this many mining rigs. You've got some guy in Russia, Africa, whatever, and they all form a collective, and that will give them a higher chance of being the one to mine the Bitcoin. And if they do actually get the Bitcoin, say over other people, they will divide the rewards up accordingly, right? So you've got to understand that everyone is in competition with each other, and a number of ways that people have decided to manage this competition is to be a part of a collective, right? So what may happen, just as an example, I'll discuss it from an individual and a collective level. So you might have a number of individual Bitcoin miners that they're just waiting, right? Every block, they're having no success mining the Bitcoin, mining a Bitcoin and being the first to crack the algorithm faster than anyone else, right? They've tried their luck. They've invested in a lot of mining rigs. Maybe there was a long time ago they got lucky, right? But now they're just running on fumes, and they're spending money every day on electricity costs. And if they've got any real chance of beating everyone else, they've probably got a lot of miners, right? And they're just waiting for the day that they'll finally be able to crack it. And every day, who knows how much electricity they're paying? It could be hundreds of dollars, maybe even thousands of dollars every single day that they're paying in order to be able to possibly be the first one. And if they hit it, it's like hitting the jackpot. Well, maybe it just gets to the point where, let's just say if there's a sudden drop in the price of Bitcoin, they might just suddenly realize it's just, okay, even if I did get the mining reward and I was lucky enough to get it, because of this price drop, it's just simply not worth it to if I got it, then it's like, this isn't going to pay off my debts, or I'm hardly going to make enough money, so I should just stop mining and wait for the price to go up. So they might decide to just switch off the mining rigs, and as a result, like if enough people do that, you're going to see what's called the mining capitulation, which is ultimately a drop in the hash rate. There's less people devoting their mining power to essentially processing Bitcoin transactions. Sorry, I got something in my throat. So, and then on a collective level, you might have a number of people who have a similar dilemma, right? You've got a number of people like in one of these big mining pools, and a number of them, you know, their pool has just not had a lot of luck, right? There's a lot of competition because only one person can get the mining reward every 20 minutes. And you might be part of a big pool, but you just might get unlucky. Your mining pool might have a lot of rigs, a lot of people behind it, but no one has successfully been able, in the group, has successfully been able to be the one to crack the code first, get the mining, and then suddenly, if on top of this bad luck, the price goes down, it's a similar thing to what I discussed with the individual. A bunch of them will decide, look, we're already like in debt, we've already spent thousands and thousands of dollars on energy costs, and now, you know, it's, if the price is going down, maybe if we do get it, it's not enough to cover the expenses, right? Like, because the electricity costs are staying the same, but if the reward is now different, it might get them to reconsider whether they're going to continue mining. So some might decide to stop mining permanently. Like, some might go completely bust. This can happen because some go into debt. Some miners like get a loan from the bank. They might get $100,000, $200,000 just to buy a bunch of ASICs units from China to start mining Bitcoin. They run up a bill on electricity, and they might decide, okay, shit, I'm shit out of luck. I haven't been able to successfully mine Bitcoin since I've started. I'm completely out of the game, right? So they essentially are going to shut off their units and withdraw their mining capacity, their hash, they're no longer contributing to the mining of the network, right? And then you might have some that decide to not permanently switch off their units, but they do it temporarily, and as a result, they're withdrawing their hash power from the network, right? So what you're seeing, what I've described is a mining capitulation. A number of Bitcoin miners decide to stop mining Bitcoin. That's what it is, right? So when there is, so these two lines, these green and gray lines cross over each other. These are daily moving averages, right? So when one average goes below another, that's a signal that the overall amount of mining power has suddenly decreased compared to the average that it was moving in, the direction it was moving in for a while. And the thing is, though, these mining capitulations don't last forever. They're always bound to bounce back, because what happens is, when the Bitcoin mining scene is about competition. Who can be the first? And if a bunch of people decide to switch off their mining rigs, that actually increases the chance that one of the miners that are still mining Bitcoin is going to get it. Let's just say you've got 50,000 Bitcoin mining rigs in the world, and all of a sudden like 3,000 of these mining rigs just go offline for who knows how long, right? That's increasing the chance for those that are mining to get a reward because there's a little less competition. Now, because there's less competition, the irony is it makes it more likely that people are going to decide to get back in the game or perhaps scale up because, you know, it's more profitable than it was before because there's less competition. So at the end of the day, people will start getting back into the mining game, and eventually these people will start to increase the hash rate again, and then you will move out of this little red phase, like when you have that daily moving average crossover on the hash ribbons, and then it will go back to normal, and then you'll see this blue dot here. It says buy, right? So when the price capitulates, it doesn't really have anything to do with what's going on with the mining, right? So just want to make that clear. It has nothing to do with the fact that people aren't mining. That's not the reason why the price went down. The price goes down for all kinds of reasons. It could be the butterfly wings in Brazil. It just could just be the economy caught a cold. Like, it's just all kinds of reasons, right? Elon Musk tweeted, you know, the price went down, right? But that caused a bunch of miners to switch their thing off. And then the thing is, though, that this tends to be the bottom. Now, why this is the bottom, I don't know exactly. All I can say is that some very smart person realized that when there's a mining capitulation, and that tends to be the bottom, right? Like, for whatever reason, right? Maybe if you have some ideas as to why that is, I'd really like to know what your ideas are. I don't know exactly what that is. But eventually, because this is the bottom, and what happens is once like enough miners get back in, and they recontribute hash power, and this daily moving average just recrosses over, you get a buy signal, and then that indicates that the bottom was in, and this was now the best time to buy Bitcoin, and the price is now going to go up. So let's go to what's happening. Okay, you know what? Just so I can ensure that you believe me and that I'm not just huffing smoke and blowing it into your face, I want to just ensure that you know what I'm talking about. Let's just look back throughout the history of the hash ribbons. I don't want to go all the way back into prehistoric times. Let's just go back to 2014, and I'm going to show you one of the first ones here, and gotta go squeeze up that log because it's anyway. So we've got a mining capitulation, and price comes down, or there's price goes down, and there's a mining capitulation. Potato, chicken and egg, right? So there's a mining capitulation, there's a buy signal, and looks like it kind of happens again, right? But then, yep, and we go up, and we go up, right? And just for safe measure, we've got one again, right? So, price goes down, mining capitulation, the miners are freaking out, they're going out of business, and then boom, we got a buy signal. There you go, and we're off to the races. Huge bull run, etc., etc. Now let's check this one out here. Do I need to scroll up or go to auto? Alright, I'll just alright, let's look at this one here. Ooh, big one, right? Massive price dump. We got a miners capitulation. We're in the red zone, and this buy signal here perfectly targets the bottom. And then we're off to the races. Here we got another one, mining capitulation, buy signal, that's a bottom, right? Another one here, mining capitulation, bottom, and yeah, so, and this just goes on and on and on. So anyway, without wasting your time, let's just go to what's happened most recently, and I've been following this for a while. You can see that there was one fairly recently, on the 6th of May, which is pretty neat. Let me pull up auto again. And I'm now waiting, you know, and the price went down, miners capitulation, you know, we kept going down, you know, miners are freaking out. Well, I don't know exactly, but I suspect that this is the bottom, you know, and I'm personally, not financial advice, but I'm personally buying with 3 hands at this stage. I think this is a perfect opportunity. So yeah, that's really all there is to it. So I really do believe that we are on the cusp of a massive bull run the bottom is, in my opinion, it's certainly in. I mean, look, we could even go down. I mean, we could go down again, but at some stage we are going to see like a really large bull run. And when I say some stage, I'm not leaving that open-ended so I can just say I was right, 5 years down the line when we finally go up, to back up to 60K. Yeah, I was right. No, I mean, I don't know. When I say now, I mean like, with the next month or two, maybe even a couple of months, just give or take. Like, I'm absolutely certain that we're going to see a repeat of this indicator playing out. And it's good times for all. So as I mentioned in other videos, like, I am not fond of speculating, picking tops and bottoms. I think it's a fool's errand to try and play this game. I think most people will get wrecked. People that want to make money speculating in this in the crypto world are usually in for a very rude awakening at some stage. And I think it's unnecessary because I believe first that Bitcoin is the greatest bull run of all time. It's just a privilege to be in this day and age, know about it, and to buy it. So I don't think you need to be more risk on than you are already if you're just in Bitcoin. That's number one. And number two is that Bitcoin presents so many opportunities already in the form of making money that don't involve rampant speculation. There's so many different ways to get involved in the Bitcoin industry. You can involved in you don't even have to be involved in tech specifically. You just be involved in the various crypto companies that exist. And what I personally talk about a lot in my videos is debanking, and there is a way that you can essentially make money debanking and helping other people debank, and that's something I'm very passionate about, which is peer-to-peer cryptocurrency trading. So as opposed to going and doing some leverage trade on Binance or Bybit where you get smoked, you can start an honest business just simply selling Bitcoin to other people who want it, right? So what I always talk about in my videos is that there are a number of people who want to buy cryptocurrency without KYC, or they want to buy cryptocurrency using a particular payment method like PayPal, TransferWise, Revolut. These are options that aren't afforded on traditional centralized cryptocurrency exchanges. So if you're simply willing to step in and fill this niche, you can sell Bitcoin at a premium, right? You can sell it at, who knows, 2, 3, 4, 5% above market rate. It's whatever the market determines. And I think that's just an honest business that basically anybody can do. And I think you're providing real value to the overall crypto economy without being involved in grifts, scams, or anything too heinous, right? So if you're interested in making money in this kind of way, you can use my referral links in the description down below for HODL or local coin swap. And if you're not interested in selling, but you are just interested in purchasing cryptocurrency without KYC, you can do the same thing on local coin swap or HODL. Again, you can use my referral link in the description down below. And if you want to do the same but for Monero, you can use my referral link in the description down below for BitValve and BitPapa. These are great exchanges you can use as well. And yeah, thanks a lot for watching my video, guys. Subscribe, and I'll see you next time.